We are live, Pat.
We are live.
It will take us. Well, I told you that.
go.
No, you got to come back. There we go. We'll move back a little bit. Let's pull in a little bit. You got to come this
There
way.
we go. Let's not be
And then,
shy.
and then we're good to go.
Sorry, I've got to turn my phone off.
Yep, we need to turn the phone off.
Doing deals up to the...
That's it. That's it. Always doing deals, mate. So we just sit here, wait for a few people to load online, and we start doing an introduction.
Mm-hmm.
And we're meant to be saying this while we're live, just because we had something to do.
Yeah.
Hey everyone, thanks a lot for tuning in to Tuesday Night Live. I've got a special guest here today. We have Patrick.
Howdy. How you doing?
And Pat, what do you do?
I'm one of the investor relations people here. So when investors come and they want to talk about building a portfolio, I'll guide them to the right department, or to yourself, or to Zinger, or give them advice on what they need to kind of get ready in order to build a portfolio.
Cool.
And yeah, we'll go from there.
Well, the crowd's getting familiar with seeing Jeremy, and they've got Wayne, they've got Gemma, and now you've got you, Pat.
Yeah.
So, yeah, everyone's different, you know. Jeremy's a bit different on here, Gemma's a bit different, you know, and everyone's got a different background. So thanks a lot for coming on tonight, Pat. So what I normally do with these Facebook Lives is that I'll read out about a half dozen news articles, laugh about what's going on, and then I get in the crux of what we're going to talk about today. And tonight I'm going to talk about a recession, the recession that we are in, how to benefit from recessions, how to... I had some little notes here that are in the description, how to prepare for recession, things that you can do, and what sort of ways to be able to move forward and protect yourself throughout a recession. Most importantly, let's get into the articles. So this is the point where people love when I start reading shit. I just throw it all around and get angry and fire up. So this one here is a really funny one, right? Everyone's talking about, this goes to your conversation, right? Pat asked me before we hopped online, he goes, I've got a case of beer on the line, right? What do you think is going to happen with interest rates before June next year? And I said they're going to come down. And he's like, yeah, I thought so too. And this is why I've been looking at all the data you put up and all that stuff. And I bet my father-in-law about a case of beer or something.
A case of beer that interest rates will come back, whatever it is, by June next year. So.
The change in monetary policy, and every week I sort of bring out the charts, and bring out some stats, and bring out some sort of numbers to look at. But this article here is from our friends over at the AFR. I'm friends with no media, but this one here is from the AFR. RBA tipped to cut rates in late 23, early 24, right? And by the sound of things, your father-in-law might be watching these things, watching the news, going, hey, scared of what's going to happen with the rates or what. No, but with it, that's where a lot of people look at. And if we look at the news, right, I find this interesting, right, because the last 4 months, they said that interest rates would not go up until 2024. But then all of a sudden, 2 years earlier, they just pushed interest rates up, right? And they go, oh, no, it's going to go up. China, Ukraine, Russia, fucking whatever. And they just changed the rhetoric. But it's really funny that it's only been 4 months, 5 months since they started it, and now they're already talking about when they're going to rate cut. And you can't trust any of this stuff, right? Because you read it and it's like, oh, it sounds like a lot of sense. This guy sounds like a professional. That guy sounds like a professional. The reality is that, they never get it right. So
I've already heard people saying that, it's already overcooked. They're kind of getting to that limit where it's too much of a interest rate rise.
I reckon there's probably another 0.25% or maybe 0.75%. It's really lost steam, and we're in a recession. And it's like, it's exciting because they're going to have to now unwind that, but then they're going to have to put more money on the table to try and stimulate the economy to get it out of recession, which is interesting. So this here just says here, the Reserve Bank of Australia is tipped to begin lowering official interest rates as soon as next year, as higher borrowing costs work to lower inflation and suppress economic... No, you've just fucked the economy. You took away all the money that was put in the economy and it's gone. Anyway, I can go on all night and read this, but the headline really says it all. Right? There's already news articles coming out saying that we're going to drop interest rates. This one here is a fun one, right? So that's from the same bloke, right, over at the AFR. What's his name? Ronald Meisen. The article goes to read, the interest bill on debt could be 75 billion by 2030, right? You can tell why I get so fucking excited by this, Pat, because, you know, 75 billion, let's just go back a decade, 2 decades, 3 decades. Everybody was outraged in 1992 when Paul Keating said that it was a recession that we had to have. And the recession we had to have was when everything turned to shit. And when the recession we had to have happened, Australia was in, maybe someone could correct us online, I think it was about $96 billion worth of debt. So throughout all the boom and all the money printing and all these stimulus packages that have been caused throughout the roaring 80s and all that sort of stuff, they created nearly $100 billion worth of debt. Today in 2022, we're getting articles saying the interest bill on the debt could be 75 billion by 2030, right? That's amazing. That's 75 billion just in interest. The yearly interest bill on more than $1 trillion in federal government debt could quadruple by the end of this decade if the Reserve Bank's official cash rate returns to pre-GFC levels. Well, if it returns to pre-GFC levels, that's what would happen. But that's what I said from the start, that if the interest rates go up too high, the government will go broke. The companies will go broke, the government will go broke, the banks will go broke, everyone will go broke. In a push to put out debt and deficit reduction at the centre of the economic debate, the conservative free market think tank said 5% overnight cash rate by 2030 could push Australia's annual interest rate bill to 75 billion. Although most economists expect the cash rate to steadily between 2.5% and 3.5% in the current tightening cycle, the IPA said even with a 2% cash rate, the annual debt interest repayments could edge close to $44 billion. And that in itself is the fun part, right? It just says that if it goes to 3.5% plus the buffer on it, as they say 1% on top, that's 4.5%. 4.5% on $1 trillion is $45 billion a year. In 10 years, that's $500 billion, right? Of money that they have to pay in interest.
Just in interest.
You're going to tax it? How are they going to do it?
Yeah.
The only way to tax is to inflate. But as they inflate, they've got to print more. And it's going to wash down the value even greater. And that's why we're going to head into hyperinflation. But, you know, read the news however you wish to. Here we go. Talk about reading the news. Here's one from realestate.com. When the RBA, this one is from realestate.com, and it reads, when the RBA might ease off its aggressive interest rate hikes. So we've only seen this. This has taken like 3 months, 4 months for us to get from A, the world's going to crash in, 40% fall in prices, whatever the case may be, to now, oh, we're going to take the foot off the brake, right? What about when the stimulus packages come in?
Sorry, what does this one say? When the RBA might ease off. Okay.
So when they stop taking off the interest rate.
They're already talking about it.
They're already talking about it. All the articles, right? Reserve Bank of Australia has its foot in the interest rate accelerator and is driving the most aggressive hikes in decades. What, from nothing to 2%? It's not even 2% yet and they're fucked. Think about it, right? The interest rate hasn't even hit 2%. And they've got to talk about taking the aggressive approach off, right? Because they're screwed. Further rate increases are a certainty after unprecedented fourth consecutive increase and third double hike in a row. Experts point to the signs the RBA is considering easing back to smaller moves, taking a breather. The light at the end of the tunnel for households juggling rising grocery, petrol, energy alongside with higher mortgage repayments is the potential for rate hikes to end by the end of the year. No, with all of those things happening, everyone's going to be fucking bankrupt by the end of the year. We're going to be in the massive recession, so they have to come back out and print some more money. That's the reality of it. There's a chance the RBA could even start cutting rates in late 23 or late 24. I just love every time you see a news article or a publication put out some stuff like this. They're just regurgitating the same information. But this is only information that's been provided from the institution that makes up all the rules that's always fucking lying to us, right? The RBA said this and then they do this and these sorts of things happen. It's all a scam. So we've now seen in the US, they've talked about the monetary policy has hit its certain part in the cycle that they have. We have the next article here, which is from Canada, right? The Bank of Canada rate could peak in September, says the CIBC economist. Could one more supersized increase conclude the central bank's rate rising trajectory? The banking giant's executive director and senior economist Corinne Charbonneau told Canadian mortgage professional, sorry if someone's got the same surname, I just butchered it, apologies, Canadian mortgage professional that further oversized hikes in the bank's next rate announcement scheduled for September the 7th could bring rates to a level that they may not go beyond. Well, that's what we've been talking about every week, Pat. Talk about it in here. Pull out all the charts. No news articles like this. We're talking before it even came out in the news, right? But it's just interesting that over the last 2 weeks, 3 weeks, all the news is now around the world. This is a global thing, not a country thing. We, CIBC, think the rates will peak at 3.25%, probably. We don't think that there's space for this type of hike, 1 percentage point anymore. So probably a 0.75 maybe in September and then take a break. We think that by then the economy will be slowing significantly on these high interest rate rises and still high inflation. The bank caught many analysts off guard with that full percentage hike, blah, blah. Anyway, they're talking about that. These articles, the top paragraph really says the whole story, right? Forget rate hikes. These analysts are predicting interest rate cuts next year. So here's an article here from CNBC. Right? Forget rate hikes. These analysts predicting interest rate cuts next year. I said as they first started that they have to cut them. Right? They can't even do anything. They can't even push them up. There is a very high chance the Fed ends up cutting the rate towards the end of next year. UniCredit's Eric Nielsen tells the CNBC. This is the US, by the way. The comments come amid growing concerns that both the US and the Eurozone economies could be facing a recession. No shit, they took all your money away from you. They pushed the price of everything up with inflation. And then next minute they're going, oh, you might end up in a recession. Well, no shit, you've got no money to spend and you're paying more money for everything. You need to print more money so they've got more money to spend on things. These recessions, we're going to see recessions go, you see like a recession, it takes 10 years, it recovers, whatever. We see a recession in 12 months and it gets fixed in 12 months. That's the world that we live in today. And I knew it years ago in that mentoring program that I did 2 years ago, said it would happen before we got here. Most market participants expect hikes to continue until at least the end of next year, but not everyone agrees. Can you really hike interest rates into a recession even if inflation is high? That would be unusual. Anyway, couldn't be bothered reading the rest of it. It's going to take too long. Here's a good one. This is from, I don't know, AFR again. Markets lower RBA peak cash rate to 3%. So beforehand they said it's going to go double digits and all these sort of things. They're saying that the top end of it now, Pat, could potentially hit 3%. Money markets have significantly wound back pricing on the expected peak Reserve Bank of Australia cash rate to 3%, down from as much as 4.5% less than 2 months ago. Right? So 2 months ago they were saying it could get to 4.5%. Now we've only put it up for 2-3 months. You haven't even seen the effect of taking all the money away and pushing the value up of all the money that's out there. You've already seen.
I would think that there would be a downstream effect that they need to kind of analyse, maybe at least 6 months, maybe even a year.
Yeah, it'd be totally screwed.
But they're talking about it now after 3 months.
Because it's screwed. It wasn't going to do anything. It's just going to crash the economy and make things even worse. So the thing that I talk about quite often, Pat, is that what we've got now, these housing, right? We've got households that are out there and they're like, I can't afford anything, right? So they go, well, what we're going to do is to stop people from spending so much money is we're going to push the price of the interest rate up. So someone's on $100,000 a year household income, and then you've got everything's fixed, everyone's like, living by the means, and then you push the interest rates up. You've now added an extra $10,000 a year for the average family in interest rate hikes, but then you've also got the cost of petrol's gone up, the cost of food's gone up, everything's gone up, everyone's going to go broke. Then now it's the difference between, we're going to get nappies for the kids or get formula for the kids. It's like, that's the decision people are going to be faced with. So The RBA board that meets on Tuesday will watch closely. This was last week. Residential property prices will suffer their sharpest monthly falls in Sydney since at least the early 1990s recession, when interest rates hit 17%. Imagine 17%. You can't even get it up to 2%, and you're putting up the white flag going, we're fucked, right? Anyway, the higher price, the more indebted housing markets of Sydney and Melbourne again led to declines. Like, when we look at it, Pat, like, this is something funny, right? Because people like, I've probably heard, I don't know, 2% or 3% of people say, Nathan, I might wait until the market crashes. Someone emailed me this morning and they said, oh, I'm not too rushed to get into a property. I'll just wait till the market crashes. Well, two things are occurring, right? One, it's not crashing, right? How often do we lose deals?
All the time.
Every day?
Every day.
How many deals would we lose a day, roughly?
Half a dozen, probably.
Half a dozen deals a day, right?
I reckon.
Well, when I'm working on deals, I've got like offers on properties, right? Like maybe 300-400 properties at once. And, when I get the right price, I get the offer accepted, I take it and I, work out who's it for. But even though once we've secured it, we could send the property to a client. They'll say yes within an hour. We send them a contract in another couple of hours. Within a couple of hours, the agent's got the contract back, and the property sells for an extra 10 grand, 15 grand, whatever. So the market isn't crashing. So a lot of people out there are thinking that the market's going to crash.
And well, the market isn't just one market either.
There's
there's I mean, even if you put it in price points, there's $2 million, primary place market where people are just looking for their forever home.
Yeah.
And then there's the investor market, there's regional market, there's Brisbane market, Sydney,
holiday houses,
everything.
And then the other part, like, I don't know, maybe share with the community, how many people would you think have, like, over the last 3-4 months, as interest rates have gone up, can't service anymore?
Yeah.
Have you seen that?
Yep.
Yeah. So people are holding off, thinking they're going to buy cheaper in the future, but in reality, they can't service anymore. So even if the thing was cheaper, they can't even afford to buy it.
Yeah.
So they've got no portfolio. Market turns around, takes off in 6 months, 12 months, 24 months time. Whenever it does, the only thing you're going to have in your hand isn't the property, it's the old fella that's something else, right? So, yeah, a lot of people hoping for something that's not going to happen.
I think if we're talking about buying in a recession or in a fearful time, I suppose, it's never the most exciting time. Well, it's never a time to be that feels exciting to get into property. There's all sorts of reasons.
There's always a problem,
but there's every reason under the sun not to do it.
Yeah.
But this is where the opportunity lies. It's pointless if we're buying property in a hot market or a market that's already hot.
Yeah.
Although it may seem like it will never slow down, it's an environment like this where I think the most opportunity lies.
A lot of people go, I'm going to wait, I'm going to do this, I'm going to do that. Like, I will sign a contract whenever my hand is able to sign a contract, right? And if my hand can't, then I'll get my other hand. And if my hands are both tied, I'll fucking ask someone else to sign the contract for you, right? Whenever you can do a deal, take advantage of the market. So I've got 2 more articles and then we'll jump straight in. I can see there's a few fans here saying hi and whatnot. So we'll get into the questions a little bit later. If you've got a question for Pat or got a question for me, drop it in the comment section and we'll get to that shortly. And a few people watch this video via Be Decentralized or Zinger Finance or Property Investment Agents pages. When I read the comments, I'm actually watching it from the back end of the B.Invested page. So if you want to ask questions, it's best to watch it from over on the B.Invested page. So just a bit of a heads up. So this one here from the Communist Network of ABC News. Why Australian banks are slashing fixed rate home loans despite successive interest rate rises. So here we go. The Commonwealth Bank slashed its 4-year interest rate loans to 4.99%. Sounds like a fantastic fucking rate, doesn't it, right? But what happens when the variable drops from 4% down to 2% in the next 2 years, right? Imagine this, right? Imagine you own the bank, right? Just take it back a step. You own the bank, right? And someone owns the bank. It's not like fucking it would just land there like a spaceship. Someone owns the bank. So let's assume you own the bank, but you also own the news, the media, right? The news outlets, right? and you just put out propaganda, right? You want to increase your profits a bit. You just start saying, well, interest rates are going up. You can just push the interest rates up 1%. Everyone gets fearful. They lock the interest rates at 5% for the next 3 years, 5 years, whatever. And then 12 months later, you drop them down to 1%, right? And they go lower. You've got greater profit, right? And then every few years, you might need to do that. No one looks at that. But anyway.
Every few years, it seems to happen too.
And it seems to happen you can see it already coming. It may have gone largely unnoticed among the screeching sirens and roar of emergency vehicles, but interest rates actually fell last week. That's right. In a rush to deliver the bad news on a hugely telegraphed double hike in the official cash rate, which the big four banks passed on in full with their variable rates, the most news outlets overlooked the fact that some leading lending rates were actually slashed. Fixed-term rates, especially 4 years, were cut, in some cases dramatically, by the likes of Combank, Westpac, Macquarie, Suncorp. The decisions were a sudden reversal to some savage hikes on fixed interest rates just weeks ago by major lenders. Both CBA and Westpac slashed their 4-year loans to 4.99%. In CBA's case, that lopped out around 1.6 percentage points off its previous 2-year whatever. Right? Read the rest of this. But when I read that article, right, and I see why Australian banks are slashing their fixed-rate home loans, right, you're taking a bet against the bank, right? The banks, if you drive to Sydney or you drive to Brisbane, you drive to Melbourne, the biggest buildings in the world are fucking banks, right? They've got the big fucking sign on the top. Why? Because they're fucking loaded, right? Why are they loaded? Well, they do what they do, right? But what is the bet that you're taking? You're someone that's watching the news and you're doing whatever. You're taking a bet against the bank for their own money, right? You don't go to the casino and win the hand on every table, right? They're making a profit off it. So when you go into the chips, and you're seeing the chips down from the casino, right? The banks of the casino handing out the chips, you're taking a bet against them. And
you're saying if you fix...
Well, I'm not saying fix them or not fix them, right? But I can say that none of my loans are fixed, and I'm not even concerned about it because I see what's going to happen in the bigger picture. And over the long term, you need to weigh that up. But from that perspective, it's a very interesting sign. Why are they dropping? Why would someone fix for 4 years if interest rates are going to... You only fix them if they're going to go up, right? It's like they already have the intel that they'd start dropping their rates to lock a few people in with stupid rates before they crash.
That's what I'm saying. So, like, people feel it's safe to fix. They're taking the bet against the banks.
Cheaper. It's cheaper.
They're betting, essentially, that the rates are going to go higher.
Correct. One last article, I promise, guys, and then we'll get on to some recession stuff and how to build a portfolio. So this article here is probably one of the most scariest articles that anyone should fucking read or watch or anything. That's the most scariest thing. It's not that Trump got raided. It's not that fucking Putin's got nukes. It's not that Kim Jong-un, little Kim, has got a fucking new rocket dick, whatever. It's that this article here from the ABC News that says the Reserve Bank is to trial a digital currency in limited scale pilot, right? The Reserve Bank is the same people that have funded wars, created divide, bought out governments, and has caused this mess that we're in, and have sat there and literally lied to the Australian people. But anyway, goes on to read, the Reserve Bank of Australia will trial its own digital currency as a part of research project to evaluate the future of central bank digital currencies in Australia. Unlike well-known cryptocurrencies such as Bitcoin and Ether, which were created by private entities or individuals, the CBDC is issued and controlled by a central bank, just like cash and electronic stores of sovereign currency sitting in bank accounts. This here is dead set communism, right? We will lose our currency in the next 5 years, 7 years. We will not see this past this decade. We will not have the dollar anymore. They'll call it a e-dollar, right? A digital dollar or some shit, like a central bank digital currency. But just read this. It says, unlike well-known cryptocurrencies such as Bitcoin and Ether, which were created by private entities or individuals, right? They are decentralized. This is a central bank digital currency which is controlled by the central bank. These are the same people that have stolen from you in the last few years, created a hyperinflation that's incoming. They have done everything that's fucking bad, and they're telling you this is good. Now we go and see that in every single shopping centre, in every street in your city and even regional towns, there's white cameras, very heavy duty biometric cameras that are being installed. When you go and notice that the government is giving out a $5,000 grant to install your camera system into your business, the only way that they will pay you to put a safe camera in your system, in your shop or whatever, in your hotel, shop, anything, but it must hook back to the police database. And no camera goes without hearing, right? It has audio. Every camera that's made today has audio. So it's very important to realize that these biometric cameras are now being a part of the central bank digital currency with the social credit system. If you step out of line, you talk bad, they will turn off your currency and you will not be able to participate. So they make it sound very lovely, right? Like unlike those dodgy bitcoins, right, or whatever, but they print this shit that loses its value and they're going to keep robbing you. So when you see anything with a central bank digital currency or the trial of the digital currency, this is evil, right? It's been talked about. I'm not going to go biblical on everyone, but it's been talked about in most religions about, the mark of the beast. And if you would ever personify that into a world that we live in, this is what sounds closest to the mark of the beast that I've ever seen, right? So it's just interesting. I posted in the Birch feed beforehand. I had a couple of our community members and investors write in about this. It's so bad, right? If they want to, they will tie to this currency. It's programmable money, right? So imagine if you don't spend the money in your bank account and they say, well, in 48 hours, if you don't spend it, we're going to delete it, right? Your money, you've got $1 million in your bank account, but you want to go to this location or you want to buy from this person, we're going to take some of that money. You've got to pay an extra tax. We're going to tax you from it. Oh, no, we disagree. We're going to just tax it. I actually had some mail open the other day, right? And we won't go into it, right? But there's a funny story that happened the other day where I found a lot of mail that wasn't open, right? Which is a different topic, right? And I found in there 6 reasons why my license was suspended. Right? My driver's license, I had no driver's license for like a month or so, didn't know. And in there, I didn't attend a jury duty. I didn't even know I had fucking jury duty. But anyway, I didn't attend a jury duty. So they fined me and cancelled my license, right? I had a property which is in the Hunter Valley, which has grass that instead of being this high, it's about this high. And they sent a photo, right? No one opened my mail. So they just gave me a fine. I lost my driver's license for that. 6 things, right? It was $2,000 worth of fines, $2,500 worth of fine. They just turn off your driver's license if you don't pay a fine. It's like, hang on a second, I didn't fucking sign up and say I have to spend my time in jury duty, right? It's cheaper for me to just pay the fucking fine, right? But it's like, this is fucked. The world that you live in, you can't control yourself, right? You have no control over your life. And this makes it even harder for you to have control of your life. So we're about living life on your terms, having a digital money that you can't take out of the bank. When you go to the bank and you ask them for 10 grand, 20 grand, 30 grand, 5 grand, they look at you like, oh, go to the ATM and pull the money out of the ATM. And it's like, I know the ATM's there, but I need fucking more than 2 grand to pay for whatever. What are you buying with it? You should be asking of this. It's like, shut the fuck up, give me money. It's my money, right? You can't get your money because it's not yours, right? It's a digital currency. The reason why today it's even worse. And you walk into the banks, you see them in the shopping centre here, you walk in and they're like a fucking restaurant, right? There's trees and plants and shit. There's no plastic screen. There's no fucking money, right? I asked them, why do you have such a nice shop? You're in your good shop for years. Like, why don't you stay there? Like, oh, it's good because we get the old people and our role is to train them and transition them into digital. It's like, if you never have access to take the money out of the system, it's not your money. You've just got rights to a part in the system. And if someone is controlling that centrally, they can turn your rights off at any point. So unlike any other time in history, you need to be taking control of your life and your own personal liberty and freedom to live life on your terms, right? And this recession that we are in is like no other. So I think it's very important. They're trying to rule out private ownership of property. They want to make it harder for people to own assets. The reason being is that people have assets, they have option, to have choice and to have freedom. And, property for me, property for you, property for our investors, it gives people a level of control. It gives them a level of options, a level of freedom, and they don't want that, right? So they try and beat everyone down, and that is one of the worst things for that.
And now there's a pile of articles on your floor.
Yeah, that can stay there. That's all right. Let's have a look here. Let's look at some questions, and then we'll get straight into it. What do we got here? Wow, I've got live. Hey Lydia, hope you're doing well. Mel, hey Mel. Andrea, hey Andrea. And then we've got here Michael.
Michael Adams.
Yep.
One of the first guys I spoke to when I joined the company.
Is it? Okay,
Yep.
cool. I remember speaking to
yeah.
Michael. I know Michael from our chat, and he might think, fuck, Nathan still remembers that chat. I still remember our chat probably 2 years ago.
Yep.
So, yeah. Steve said here, hey Nathan, borrowing is getting harder due to stricter lending controls. What is the best approach to release equity to take advantage of the good deals out there at the moment? Finance is always the toughest thing. If it wasn't for finance, I wouldn't have 250 odd properties. If it wasn't for finance, I would have 2,000 properties. It's working out how to crack that system. Steve, we need to catch up and have a chat to your broker without mentioning names and stuff like that. I'll have a chat with your broker this week and see what we can do for the next steps in your plans to get you to where you need to be and where you want to be.
It's everyone's challenge.
It is, eh?
Whether you've got one or 250.
I
think it's like there's always a challenge. And I know it's a cliche thing and you say it all the time, but if it was easy, everyone would be doing it.
Yeah.
And like the biggest thing that I find when it comes to that is people get overwhelmed. People get kind of, you're in a bit of a boxing match or something, and you just keep getting hit. Oh, finance isn't working with that bank. Not working with that. The valuation didn't come there.
But adversity, that's how you get a warrior though, right? You get a warrior from getting fucking hit, right?
You got to keep pushing. You got to keep. Sometimes time is your best friend as well with these things, and time takes time. So you got to just hang in there with some of the finance issues that the people come across.
Yeah.
But yeah, that's one massive challenge that I always come across for people.
Rob says, "G'day, legends." Hey, Rob. The house always wins. That they do. How do I watch this so I can ask questions? You're in the right spot, Jackie, to ask questions. We can see your question here. What have we got here? What do we got? Charles, quick look at the rat's tail, Birchie, looking sharp, mate. It's getting long. It's getting long. It's plaited. It's a plat's tail today. Nikki said our accountant recently advised us to fix our loans. I don't know who your accountant is, but we need to chat about that. Reggie said the cops don't have that technology. Well, it's pretty interesting. It's actually not. It's in a New South Wales. I'm talking about New South Wales. It's in a New South Wales sort of database that you have to register your server details for your cameras so they can access that if you need. So biometric data is very, very crucial for the future of the world that we're going into, as is the digital identity, as is all your digital wallets. And I think they signed everyone up quite well in the last 2 years with recruiting everyone to probably, what do they say, 95% of people are now eligible for a new digital identity that they have to log in and share and show to people. So that's where I believe that your money will go to. And it might have sounded stupid years ago, but when it comes out and everyone's money is going to be tied to that, well then it will become a lot more clearer. High Vision got themselves in a whole heap of shit for facial recognition software in their cameras. Exactly, Brandon. Lydia said,
didn't you tell me some story that in China, I don't know, I'm not sure if this is true, but
you walk across the road
and there's facial recognition,
and by the time you get to the other side, you've had money taken out of your account. And also they'll have like a wall of shame, and I think like I'm not like I'm pretty well rounded with lots of different cultures and whatnot, but like in Chinese culture, like it's all about the face, right? You're publicly ashamed. Like for me, I wouldn't give a fuck. I'd be like, I'll take pride in it,
What, they
right?
put someone's face on a
They
billboard
have
or
like
something?
literally, do you know those scrolling round screens that
Yeah,
you
yeah.
have? They literally have screens and walls of people that are like, this person's committed this crime, like something like off Demolition Man. Do you remember watching
Yeah, I
Demolition
never
Man?
saw it. I never
I
saw
go watch Demolition Man. That's the world we're heading into. It's really, really commie. So, um,
it. Commie.
it's so commie, so commie. We think we're free. We're just free range communists. Um, uh, we got here Lydia. Yep, that's the rest of us, right? Our rates have been pushed up, but it is what it is, and we just got to ride that train. And I think, for me personally, I'm very optimistic about what's to come. Tom said, "What do you think of the media propaganda about governments introducing rental increase caps?" There's always going to be a way around that. You just increase the rent more, increase it more regularly, whatever the case may be. So. Um, that's once again a communist thing. What do you think about the media propaganda about governments? Government is Latin for mind control. Govern, mind, meant control. Or it's the other way around. Mind control. It's commie. Luke, hey,
Yeah, it
but
would
you're
be the
looking
other
forward
way
to
around.
catch.
Yeah.
Looking forward to catch up. Look forward to chatting to you then, mate, and helping you with next steps on your journey. So,
Here we go,
um,
Jackie.
okay, cool. Jackie said, "You probably won't remember we went to the same primary school. Quite possibly, I do remember you. Hope you're doing well. I'm a single mum to one teen, have a lot of equity in my property, and I'm looking at jumping in too late. I'm trying to read your message. Even with the equity and some savings, I work casual, but always make enough to service my two." Jackie, probably a good thing would be to have a chat with Patrick. So like flick a DM later. I'll get someone to hop online and have a conversation. Just make sure you're doing a chat with us. Um, but yeah, probably a lot more moving parts in there. And let's see by having a chat with whoever you can talk to, whether it be the broker or work out a strategy around it. So cool, lots of questions. Keep the questions coming through. And let's get into some of these things, right? So Pat, tell me about your story, right? How long have you been with the business
Cool.
for now?
For 2 years. 2 years
Over 2
in
years.
June.
Yeah.
So 2 and a bit years.
And
Yeah.
what made you want to come and get a job here?
I didn't want to travel to the city anymore.
Okay.
That was pretty much the basis of it. To be
Okay.
honest.
You didn't like your job?
No, I loved what
Yeah.
I was doing at the time.
Yeah.
So I'm 35 now,
Yeah.
and I only entered the workforce when I was about 32. So I was a professional musician
Okay.
through all my 20s and touring around and had a great time. And then fast forward, got married, had kids, and needed to get a job, support the two
Yeah.
little ones. And anyway, I was working in the city. I was commuting for probably 17 hours
Yeah.
every week, back
People
and
do that
forth.
for not just a year, they do that for 40 years.
I know.
That's what the system designs us to
It
do.
just
40 years.
I couldn't do it. I couldn't do it. Time with my kids was more important than sitting on a train.
Yeah.
And but I think there was a Facebook post or something that you put up, literally like looking to expand the team or something. So
Yeah.
so I inquired and there you go. And I've been following you for years and years. I came in for a map session in about 2013, and I remember it was with Daniel at the time when it was like a group map session.
Yeah.
And we were late.
Yeah.
Me and my wife, and we just didn't do anything. Like we had 50 grand or so saved up, and we could have done something. It was a woulda, coulda, shoulda, but didn't scenario. And here we are, kind of 10 years. Well, not quite 10 years, but about 10 years later.
Yeah.
And we've just recently picked up 2 properties for ourselves, and there's some equity in those already, and we're doing a refinance, so we'll be getting that equity out.
In that period, like you bought a house, you did
Bought out-
things,
yeah, bought out-
and bought
Yeah.
more properties, and yeah. And then-
Yeah, so, but it was just interesting. Like when we were doing the refinance for the 2 recent properties that we bought, Sometimes people, and this is why I love using Zinger. It's a bit of a plug, but
Yeah.
sometimes investors are comfortable with their own broker, and that's totally fair. And sometimes they'll buy a property,
Yeah.
and they'll take it back to their broker,
Yeah.
and they'll say, "Oh, my broker said there's no equity in it."
Yeah.
And a perfect example for me is that one bank valued a property, and there was 120 grand in there for me.
Mhm.
Another bank valued it,
Yeah.
and there was nothing.
Nothing. Yeah.
So it was just an interesting process for me to, and these are two major banks.
And you said you got the equity today, or you got the equity.
I'm starting
today.
to refinance. Yeah,
There we go.
starting to refinance.
What are you going to do with the 120K, Pat?
Well, you won't be happy, but half of it goes into my HEX debt. So this is the other thing.
That's the thing, right?
This
The
is part of the
system.
challenge.
You're not allowed to go get a property loan at fucking 18 or something like that, but you can get yourself in 100 grand HEX debt and be stuck to it for, not even bankruptcy you'd get rid of the HEX debt.
So, yeah, so that's kind of my catch, and that is part of my challenge for this stage of the process is half of the equity that I'm going to get out goes into extinguishing another debt that the bank doesn't like. So they're more than happy to take it on, and then I'll use the others to buy another one or two. But my goal's 5 by the end of the year.
Okay, cool.
Yeah.
We'll get you there. You know that we will. And it's interesting when you say that, right? Because most people will be sitting here, and most people that come to you, and I hear you having conversations with people over the phone, and when you're talking, the customer service team are walking all around the office, and they're getting their headsets on and talking, and say, but the thing is that most people think it's about the property, right? But it's a banker's game, right? It's understanding how the bank works and working out what you require from the bank and what the bank requires from you, and working out and filling in those gaps in the middle. So let's say your top 3 tips from being an investor, right? You've been involved outside of the business for sort of 8 years, understanding what we do and all that, and a couple of years in the business, and you've now got a portfolio grown. What would probably say the top 3 things that you could give to people watching that might
just not to be. There's no need to be. There's no need to be scared or fearful. I reckon that's the biggest thing that holds people back.
Yeah.
Be open to different perspectives of how a portfolio can be built. And we talk about recession-proof portfolio, which I think is a really cool concept. But if you let's say, I'll use an analogy. If you're wearing a bulletproof vest, it's a defense mechanism.
Yeah.
You may still get hit.
Yeah.
But it's there to defend you. So like
shrapnel.
Well, that's right. Or anything. But like a recession-proof portfolio isn't going to say that there's not going to be any speed bumps or challenges.
Yeah.
But it's a portfolio that will be able to kind of protect you and protect your assets and protect your lifestyle through a challenging time, which some people use the challenging time as an excuse not to do anything.
Yeah. And I think that it's like really conscious of some of the things I say sometimes, because they can be deemed as being insensitive. But like, there's some people that have like certain views of things, and I look at it, I'm like, some people just find any excuse to be a fucking loser. Like, that's just basically it, right? Like, some people go, oh, it's because of this, it's because of that. I saw this thing the other day. It was something on Facebook, right? I had 2 kids, right? And I had an alcoholic kid and a non-alcoholic kid, right? And the alcoholic kid goes, well, I'm an alcoholic because my parents were alcoholic, right? And the non-alcoholic kid said, well, I'm not drinking, I don't touch alcohol because my parents were alcoholics, right? And it just goes on to say it's like it's a mindset, and a lot of people will find excuses and reasons, right? Reasons to go, oh, well, I didn't do it because we're in a recession. We didn't do it because of this. We didn't do it because of that. But a lot of it's just taking action. But like, I think a lot of people are fearful not to take action because they have their own preconceived ideas, or they don't have clarity on where it is that they're going. Once you have clarity, then you go, okay, does this fit in? No. Does this fit in? No. Now, notice as we buy properties, Pat, that you go, oh, cool, I need this one or I need that one, and we talk about it. And
you got me to sell you the idea that I should buy it. You said, why is this a good idea for you?
Yeah. I ask you, like, I want you to justify it to me as to why. And people will just buy shit because they will buy shit and they don't get too far, or people will not buy something because they don't know what it means for them. And I think having
waiting for I'm going to wait for the right time.
Yeah.
Oh God.
Yeah.
Like, waiting for the right time. It will never be a right time. The right time is when you decide to actually pull the trigger and do something.
Every time I've bought a property, Pat, I feel fucking. It's not like, oh, it's great. Like, I'm always broke, pushing myself. I'm always brokey. Like, I talk to you about it, like, quite often, right? Like, oh, fucking, oh, push it another way. You're like, what did you buy? And it's like, oh, I fucking bought 4 motels. And it's like, I don't know how I'm going to settle it, but I'll find a way, right? And it's knowing your parameters and knowing your game and knowing how to make it happen. It's like, that's how you can pull it off. But there's never been a day where it's like, okay, everything's perfect, guys. It's all lined up, all the green lights to the city. Let's go buy a property. It's like there's always a challenge, always adversity. And people will look at this time and be like, oh, it's too tough, or the news says I shouldn't do it. And it gives people comfort. It's like the little blankie for the fucking, oh, it's a little blankie. I better feel warm and safe. The news told me I shouldn't do shit today. And, 10 years is going to pass someone, 20 years is going to pass someone, and people are like, fuck, why am I still renting a house and I've got to work and I can't afford anything? And it's like having that strategy, having that plan. And when I first started investing in a property, like the market, when I started buying property, Sydney market was fucked, right? It was 2003. Prices had actually dropped about 30% at the time. The market had turned to shit.
What were the interest rates in?
Oh, like 9%. Yeah, I remember fixing it at 8.65% interest rate once, and I was like, I'm never going to fix my interest rates ever again like this. And I've fixed interest rates over the years, but it's been on my terms, not on, these sort of things. So I need to know how that works, and I want to know. And I could sit there and go, oh, it's all too hard. I don't want to buy anymore because it's, I screwed up or whatever. But I'm just like, okay, how do I learn from that? How do I move forward? But having a recession-proof property portfolio, the market was very tough pre-GFC, like a very, very rough market. And we were in a recession. Every second house in Western Sydney had a white piece of paper just like this with writing on it saying, do not enter, Merc, Tag, Mars, whatever the company is that's repossessed the property. If you used to enter, you're trespassing, whatever. This property is going to auction, contact this person, blah, blah, blah. Every second house had a bank repo to it. You don't see bank repos anymore. It's a different market. It's not that tough. But the tough is the barrier of entry for a lot of people. But you can get into a property for 100 grand. Like when I say 100 grand, that's a purchase price. You could have 20 grand and buy a property. You could have 30 grand and buy a property today. And I think building a portfolio in a recession, like my fear was always, what happens if the market shits itself, right? What happens if the prices do fall by 20%? What happens if I lose my job in a recession? What happens if interest rates go up? And that's why I always said the three things: buy it below market value if the market turns to shit, or you can sell it and get your money back. Buy it with upside for capital growth. That's the view. Buy it where it's got a positive cash flow, because that's, if you have no job, well, it's going to look after itself. So, yeah, just my thoughts on that. Fun.
Yeah, for sure.
What are your thoughts with investors at the moment? What do you see their biggest mistakes are? Is happening? Maybe
I see. Actually, I think I definitely was kind of a bit more inexperienced, obviously, when I started. But it was in the middle of
Corona.
Yeah, it was in the middle of all of that.
Yeah.
And people had every excuse not to buy then too. And I wish I had my time again. No offense, but I would have smashed them on their perspective.
Yeah.
I want to see what happens with JobKeeper. I want to see what happens with lockdowns. I want to see what happens with blah, blah, blah. There was all this, all this information saying the market's going to drop by 30%, 40%.
Yeah.
It doubled.
And all
every one of my, I say my investors, every one of the people that I'm helping that bought in 2020,
yeah,
their properties, I would say would have gone up
double
for sure,
50% up, whatever, yeah.
But it's it's
all the people that didn't buy. That's what I always find humorous, right? Like it's like
all the people that went and bought, let's say, a house and land package. They said, no, I want to buy my forever home first, and then I'll think about investing. Like it's a to-do list. Like I gotta, and to be fair, that's what I did.
Yeah.
But I bought my primary place before I kind of understood all of this.
There's nothing wrong with it.
No, there's nothing wrong with it. But it's like sometimes if you're telling me what I got, like people might say, I want 100 grand passive income within 5 years. And it's totally attainable.
Yeah.
But you got to make the right choices to get there. It's like,
Yeah.
I always relate it back to fitness. Like, hey man, I want a six pack for
Yeah,
for summertime.
yeah.
But you know, I love chocolate cake as well. I'm getting
That's what it's fat part. And that's something that, yeah, just looking at like people that go for their forever home. I look at, $1 million in debt to buy a house to live in, right?
Mm.
You are now the derivative for the bank
You're
to pay
tied to
that
it.
mortgage, right?
Mm.
But if you go and buy 5 properties at 200 grand, still $1 million, but you got 5 sets of tenants to go out and do the work and come and pay the rent with that income that's coming in. 5 rents at $300 a week, that's $1,800 per week. $1,800 a week times 52 is 90 something grand a year. That 90 grand a year, you could definitely get a very nice rental property for that compared to what you'd buy for $1 million to live in anyway. So,
Mm.
yeah,
Or
strategy.
the alternative is I mean, let's be honest.
Yeah,
Um, Not everyone has goals to own
yeah,
15, 20, 30 properties.
yeah,
You know what I mean? Some people like five is massive for them, and that's awesome.
yeah,
And so if that is the case, get your five first, and then maybe, you know, with the rental income, you'll be able to
yeah,
service for the potential equity that might be in there. And if you've bought well, and you've bought below market value, and in a place where there's a lack of supply and heightened demand, and
yeah,
you're looking at all these different, um, kind of common sense
yeah.
scenarios where a property would go up. You can pull the equity and go buy your forever home, and then you can be emotional about that purchase. Don't be emotional about the five that you buy for the
People
million
get
dollars.
emotional about when it's a logical decision. It's a business decision. Like, no business survives on logic. You don't see any successful business. Survives on emotion. Like, business is based on logic. And that's where a lot of people get screwed. And you mentioned, like, a lot of people don't want to have 10, 20, 30 properties, and that's cool. I always think about, what are you trying to achieve? And if you
Mm.
want, if you have a property that brings in 2.5 grand a month, if you just have five of them, that's 5 times 2.5, that's 12.5 grand a month. Who doesn't want, 12.5 grand a month? That's 150K a year. Easy.
I think um, one of my favorite clients, and I don't think he's on tonight, but he was a bloke. He came to us. He said, "I just want to get one property."
Yeah.
And then literally 12 months later, we were laughing and we were chatting about it. And he goes, "I can't believe I'm settling on my seventh property." And it's within 12 months. And he just said, "All I want is one." And
Yeah.
that's fine. And we didn't, certainly there was no like pushing. He just said, "Oh, well, we'll just keep going." Like,
Well, when you sign contracts, like, if you have a gun to your head, you'd be like, you'd be like shaking when you do it, right? Like, no one holds a gun to anybody's head. It's
yeah.
whether you want to do it. And, people, I remember Linda, for those of you, a lot of people remember Linda from Koshy years ago.
The OG.
The OG. She might even still be in the room next door to us right now. She was here just as we went live. I forgot what I was going to say about that.
Well, she first came to you as a client, didn't she?
Yeah, yeah, yeah. I forgot what I was going to say about Linda. It was good. It was a good
I'm
story.
sure it
It
was.
was about You said to me, what did you say just beforehand? You said about,
My guy wanting to start with one property,
yeah.
ending up with seven or something,
I forget what I was
10
going to
months.
say. It was about that. Like, Linda has a portfolio, a massive portfolio, right? And it's like, it all just starts with a bit of action and making choices, and
Yep.
yeah.
It's
So,
all relative to your goals
yeah,
and how serious you are about hitting them.
yeah,
Again, with the fitness thing,
yeah.
like, if you really want to be in shape, and that's super important to you, and you
You'll go
might have
do
a
it.
driver, like you want to keep
Yeah,
up with your kids, or I don't know,
yeah.
you want to impress some chick down at the
Bella Vista Hotel. Yeah.
like whatever your driver is, that's great.
It's been a
But
while since I've been to the Bella Vista Hotel, Pat.
well, different time there.
Different time, different world.
The only
But
house parties I could do these days are like for 1-year-olds and 2-year-olds.
but it comes down to people's goals, right? And like,
Yeah,
people, if they have clarity, they take action. If they don't have clarity, then they are lost on their goals and on
or
that
maybe
journey.
their goals just weren't really
Yeah,
that
important.
they weren't that important. They just thought
Yeah,
they were.
yeah. We've got some little notes here as well, which were put here for us. What do you think the benefits would be of a recession? Like, looking at the current climate, let's say that you know, the excuse people say, oh, I'm going to wait for a better time. I'm going to wait for this to happen. I'm going to wait for that to happen. I guess the benefits of a recession, or the worst things about a recession, if the recession's bad, prices might fall, right? In a recession, it's really only prices might fall, right?
I think it's the opposite. So
Yeah.
the buyer would be, well, sorry, I mean, like, let me explain. The buyer in a recession is like, I'm gonna wait it out,
Mm.
you know? Like, this is what we see
Yeah.
why people don't do it. I'm gonna
Yeah.
wait it out,
Why
wait
not?
for a good time. Whereas the seller is thinking, shit, I'm not gonna wait.
Yeah.
So I wanna sell. So I think the benefit
That's
of,
the opportunity.
yeah,
Like,
yeah.
I would find nothing greater, right, than the whole market to turn to shit,
Mm.
right? And that's why I play in markets that are shit. I don't go into markets. So just as much as the last 2 years we've seen Sydney house prices rise, we've seen the Gold Coast rise, we've seen Brisbane rise, we've been seeing things like that. I used to buy 50 properties a month in the Gold Coast for myself and for my clients. Now we buy fucking hardly any. When was the last time you saw a Gold Coast?
One
One a
last six
month?
months.
One a month or so.
Yeah,
Probably one a month, two a
yeah.
month in that corridor. But we're in markets which haven't gone up. Like the
Mm.
last 3 years, we've seen prices skyrocket. But if I look at markets, I'm thinking, hang on a second, there's opportunities. If we look at Sydney, we're picking up properties in Sydney, the Sydney market, for sort of, used to sell for 450 for 350 or 300 in the Sydney market today. And we're buying stuff cheaper than 7 years ago. So when the market's all turned to shit, it's like everything's on sale. We can go pick up things while everyone else is sort of fearful and all that. But the mindset is, oh, we better hold and wait. But that's the same people that don't have a portfolio. The people that have got the large portfolios see the opportunity. And I think the cool thing that we have with our community and with our investors that we work with is that they're like, fuck yeah, we can see the opportunity, let's go and jump
Mm.
upon it. And yeah, if you're wanting to build a portfolio of 10, 15 properties, you can't, let's say the market fell by 20%. Let's assume that the market did fall by 20%. That one person waiting to buy their one property will pick it up 20% cheaper. Wow, right? But for someone that wants to build a portfolio of 10, 15, 20 properties, you're not going to build 10 properties, most people, in 6 months, right?
Mm.
It's going to take you 12 months, might take you 2 years, might take you 3 years, might take you 4 years. So in reality, if you wait for the cheapest property, then you buy it, and then the market starts going up, how are you going to get your other 9 properties? They're going to be more expensive.
Mm.
So yeah, it's just really comes down to the mindset of successful people. What other sort of challenges do you see, Pat, on a day-to-day basis about people's mindset? What here you go. I've got a question for you. What would be the top thing that separates a successful investor from an unsuccessful investor?
Um, I think it's got to be just having the right information in front of people, in front of themselves. Sorry,
Yeah,
and being able to be in a position to actually take some action. Like I've got another client of mine, a lovely guy, lives down in Canberra, and we speak quite often on the phone.
yeah,
And he has every reason under the sun not to invest.
yeah,
But he's like, no, I'm in it for the long game.
yeah,
You guys are taking care of me. We're getting some great deals,
yeah,
and he's buying, and he'll settle a property, and a week later he'll say, Pat or Pete from Zinger, can we
good, good,
refinance?
good. Yeah,
So he
yeah,
wants to jump straight in. So there's a guy who's got like, let's, for lack of a better term, an aggressive investment mindset.
yeah,
He knows that like he will be capped in terms of servicing,
yeah,
probably just around the corner,
yeah,
but he's not waiting. He's going to like squeeze everything he can and build that portfolio. So he's taking action. He's like, he's swinging the hammer and making things happen, which is really cool.
yeah,
Whereas there's the other people that have all the capacity in the world,
yeah,
and they're like, well, this and that and the other thing. That's why I'm not going to do it.
yeah.
Interest rates. Did you see the interest rates go up? They went up. Okay, cool.
Did you see my rents go
Yeah,
up?
did you see the rents go up? Cool.
Yeah,
And that's the other thing as well. People are fearful about like the interest rates, but let's look at the whole picture. So
yeah.
if everyone is fearful of interest rates and people
No one's
don't,
going to be buying.
no one's going to be buying, right? So what are they
Yeah.
going to do? They're not going to live on the street.
Yeah,
They're going to pitch a tent. They're
Yeah.
going to go and rent.
yeah, Yeah.
right? So that's going to have a ripple effect
Which
moving
it is
outwards.
having a ripple effect.
There's a complete rental shortage in the whole
Exactly.
country. Like
Exactly.
I don't think there's any like state that doesn't have a rental shortage at the
It's
moment.
amazing.
It is amazing.
There's nothing in the world that doesn't have a rental shortage, right? It's
And
happening everywhere.
then let's throw on top of that like the immigration policies that are kind of, this is a different conversation, but
Yeah.
like there's all these immigration policies that are going to be triggered soon. There's going to be like
Which are like
200,000 skilled workers from other countries coming into
Yeah.
our country, and that's cool. And
Where are they going to live?
they're where they're going to live.
Exactly.
So
There's a
So,
pent-up
yeah.
demand.
But to bring it back to like what separates people from being successful or not, I think is having clear goals, having a good strategy behind what they're doing,
Yeah.
and just not to be fearful. It's easier said than done.
Yeah.
But let's imagine this. Imagine like back in the 70s, you could buy a house for, I don't know, 20 grand or something.
Yeah.
And then what would that have been? 1975, you could buy a house for 20 grand. And then in 1990, it's worth 200 grand.
Exactly.
And then,
You can't even work that hard.
yeah.
Yeah.
And then, so interest rates, 14% at the time? Something like
Whatever
that.
else, yeah.
And then another 10, 15 years, now this thing's worth $1 million.
Yeah.
And like, there might have been 6 months or 2 years or something in that time where the market would have gone up and down and sideways and
Yeah.
had a bit of stagnation or whatever. But you can't get fearful of that. You've always told me, and I have relayed it to clients, like the property market is never just.
It's not linear.
I'll go this way. It's never just up like that. Imagine
Yeah.
that. Imagine how good that would be.
Yeah.
Right. But then it would take away any of the finesse that we do. But like, there's always going to be little ups and downs and up.
Yeah.
So
I like doodling. I play with things. That sounds really bad. I'm doodling. I like playing with things, right? I've got a ruler here. I've got a pencil. And I was just drawing lines, actually, as you were saying that, right? As you were saying that, I was drawing lines. And it made me think, right? Like, if you're in 1990, let's assume, and I'm just going to draw like a little chart and make some calculations up here on the fly. Let's assume that you had a 200K house and your interest rate was 15%, right? 15% of a 200K mortgage would be
3 grand,
30K,
30 grand.
30K per annum, right? So if in 1990 your house was worth 200K with a 15% interest rate, it's got 30 grand a year interest. But if you fast forward to today, and let's assume that let's just say it's $1 million, right? $1 million at a 3% interest rate, it's still 30K. The cost of your house didn't go up to hold it. What happened was the interest rate got manipulated, and then the ability for people to be able to go and afford. And that trajectory of cash rates are going down lower and lower. We can't even meet our old interest rate now without going into a recession. So we're going to have to see monetary policy go backwards. And people are looking too small. They're looking at, okay, this deal, they're watching the news, whatever. They don't have clarity. So I think if we look at a recession, how to really take advantage of recession, I think having a plan, having a strategy, having clarity on what it is, having a buffer in place, knowing your cash flow and working on that very regularly, looking at what expenses you can cut, whether it be a cheaper interest rate, whether it be a cheaper insurance policy, what you can do to bring those costs down, what you can do to increase your cash flow. I actually got a message from one of our staff today, actually, in Queensland, and he, you know him very well, and he messaged me because we were putting up his rents on his property. It's like, hey, we should better rent up to like 320. It's like, there's nothing on the market. He goes, you should put up to 350. And it was previously renting for $240 a week. And when he bought it, it was rent for $180 a week, right? And I looked online, I was like, fuck, don't put it on for 320. And I look at rents every week for every area. And I was like, gobsmacked. I'm like, there's nothing under 350. 2 weeks ago, there was stuff at like 260, 280, 270, whatever. And the market is moving that great. And a lot of people aren't ahead of that curve. They don't even know what's happening. There's, the property manager's got it sorted or whatever. But if you can, the most successful investors, when I quit my job, it was a convergence of a couple of things. Let's say 20 properties, and let's say that, I don't know, 150 grand debt on each one. So that would be like $3 million worth of debt at that point in time. Let's say 3 interest rate cuts of 3% cut, 3% rate cut on $3 million worth of loan, right? that's each one is 30 grand, right?
Mm.
That's 90 grand a year. So if you have an asset base through a recession, let's say you build up $2 million worth of asset, let's say $3 million worth of asset, and the interest rate comes down just 1%, that's 30 grand a year in your pocket. If it comes down 2%, then that's 60K in your pocket. And if we know where interest rates are going to go, and we can see where rents are going, if your rents go up 20 properties or 10, let's just say someone buys 10 properties, and the rents go up by $50 a week, that's $500 a week, that's 26 grand a year.
Mm.
The convergence, that's where your profit is. That's the margin. A lot of people are fearful about this or that or the next thing, but they don't have the focus on their real game. They don't have a strategy. Um, they have a fluffy idea about building a property portfolio, a fluffy idea about wealth, but it's having that solidified, sort of goal and going, hang on a second. And when I have clarity, I always talk about goals at the end of the year and mindset and planning and all that. And I like being able to tick off on my goals and going, yep, I've achieved that, or I failed on this. What can I do to improve that? But I look at it as like a to-do list. And I think to myself, if my action, right, let's say we joked about going to the pub, we joked about we haven't been in there for ages. Well, I've never been there with you actually, but I used to go down there all the time. And when, if you go down the pub, it's like, is this going to get me closer to my goal or further away from my goal, right? And a lot of people don't have that clarity, so they can't identify if the actions that they are taking in their life is going to take them further away from the goal or put them closer to that. So I think more so than ever, having that clarity and the vision of where you're heading to, will help you avoid from, making silly decisions throughout this time. And I think having multiple streams of income, right? Like in 2020, in like 2 3 years ago, a lot of people thought, okay, I've got my job, there's me 50 grand a year, there's me 80 grand a year, whatever. I'm fine, right? I'm earning 100 grand a year, I'm doing good. But how many people lost their job in that period? It's like, okay, you're gone. So yeah, looking at in a recession, you don't want to rely on one stream of income. You want to you want to have multiple streams of income. A property could be a good one. Multiple properties could be good ones. Owning a business might be a good one. There's different things that can help people out. So I think understanding of your cash flow, whether it's ins, outs, or whatever, could guide you through a recession. I think if the market does fall, well then double down, buy more, right? I see so much excitement from the fear, right? There's so much fear, but my fear is different than everyone else's fear, right? My fear is that the market won't fall low enough and it won't stay down for long enough, right? Because they're going to have to print a whole pile of bullshit Ponzi schemes to try and bail out. Imagine, as we've got all the builders going broke at the moment, imagine start seeing that you've got all the developers going broke, all the big multinational developers, they start winding up. And I noticed yesterday that there's massive development sites in Parramatta, which is very big development area. There's like, I'm talking like 500,000 unit complexes. They're selling the land, right? Why are the lands getting sold? Because they can't do pre-sales. They've got no buyers. They've got higher building costs. The builder's gone broke, whatever the case may be. So that could actually sink the developers, right? So they're going to have to come up with this big sort of Ponzi scheme to bail out all this system we're going into, which is going to cause the next boom. But that in itself is the opportunity, and people will sit there, they'll read the news, they'll listen to all those people. We should do a poll, right? And we should actually go and find who writes the shittest articles in the whole news space, and go and find out, do those news writers even own a fucking property, right? Because they're telling everyone what they should be doing, how they should be investing, the decisions they should be making, and all these really logical sounding things that people go, oh, wow, I better do what this guy says that I've never seen his face beforehand. All of these people, do they even own a property to be giving some fucking advice, right? And if they're a brokey, well, then why would you take advice from?
What's a brokey?
Someone that's broke. So if they've got nothing, I don't think any of them would have a property. Yeah, especially the ones
they're all waiting for the right time.
Well, especially the ones from the ABC.
Yeah.
I don't think any of them. They might have coloured hair or something, but But with it, yeah, it's important to look for that. And just finding the opportunities. Like, I'm seeing people get fearful just as much as the people that are fearful of not buying. Imagine the people that are fearful of getting stuck, right? The fear of missing out or the fear of getting out, FOGO. We just made it up. I don't even know if it's such a thing, right? FOMO, the fear of missing out or getting in. What about the people with FOGO, the people that have got the fear of getting out of a deal? And you can go, well, I'm your last option. You know, the prices are falling. Check out all this market. Like, I use all those news articles every single day in my scripts and dialogues for negotiating with agents, having the conversations. Oh, look, things are fucked. You know, I'll try my best to get you that price, Mr. Real Estate Agent, but I think we're going to have to be another 20 grand cheaper, whatever the case may be. And I'm trying to pull the price down as much as I can with all the resources that I have. So use 2 years ago or 6 months ago or 12 months ago, you literally go to a property and you have 50 people against you trying to buy it. And, you know, why would you want to buy in those sort of terms? You have no control over your terms. You have no control over the sale. You have no control over the price. You have no control. I will take your offer if you pay an extra 50,000 over asking price. And if you do no finance, no pest and building, you got no finance yet, but just go unconditional like an auction term, I would not want to participate in that. However, um, you know, now you've got a market where there's like, oh, you know, it's the third open home. We haven't had any buyers through. You're the first person through, whatever. If there's an opportunity like that, wouldn't you want to be like, fuck, great, I've got some guy that's desperate to sell me some shit. Let's try and do a deal. So they're the opportunities that present themselves in this sort of market, but they are limited because we've only seen 4 months of rate hikes. Everyone's turning to shit, and then they're already talking about dropping rates because everything's going to turn to shit, which is what we said 4 months ago, and I laughed.
It reminds me as well, this is before my time, but there was an area in southeast Queensland that you were purchasing for investors.
Yeah,
Let's say around the 200,000 mark.
yeah,
And
that was most of the southeast Queensland.
well,
Yeah,
yeah.
yeah,
And for probably 12 months, maybe even 18 months,
yeah,
it didn't go very far. Like there wasn't much growth,
yeah.
right? And so sometimes people will come and they'll buy one property and they'll expect instant gratification and instant equity, which we always shoot for. Like, we are purchasing below market value, but it always is up to the bank's valuation, kind of opinion on the property.
Yeah.
But people were kind of turning it around on you, being Birchy, you bought me a dud.
You bought me a dud.
This is shit house. I'm gonna sell it. And they sold it after 6 or 12 months.
Yeah.
And maybe they made 5 grand or 10 grand.
I'm not buying Bitcoin, right? I'm buying fucking residential real estate where someone has literally slaved their. I look at properties that are like 30 years old, right? And like, maybe I'm autistic when I think this, right? I don't know, right? But I sit there and I think, how many people have built this house, right? Maybe there's like 20 people. There's the electrician, the bricklayer, the lackey, whatever, right? That have built this property. Are these people even alive still that built the property, right? How many human hours actually went into this property when it was built? Does the person still exist, right? They're the sort of things I look at in the property. People come in and they're like, Nathan, like, oh, the property was a dud. I couldn't get equity out of 3 months. I'm like, you can't get equity out of 3 months, go sell it today, right? And it's like, just because the bank says no, well, then you could sell the property and make yourself 50 grand, 100 grand. And people literally, like, from both sides of the spectrum, they go, oh, well, it hasn't doubled in a year, so I better sell it. It's like, well, you had the wrong intentions for going into the property. We don't want to help you do that. So hurt yourself as you please. But then people, you know, they go, oh, wow, the property's gone up by 50 grand or 100 grand. And I see properties on the line all the time, and I'm like, I bought that for you. If you don't want to come and talk to me about fucking, you know, should I sell it or not? Like, go make a decision. And I've seen people that got to 10, 15, 20 properties. They went and sold their properties. They made 100 grand on each property. Like, they go, oh, cool, I made 100 grand. And these properties have gone up another 200 on top. So they've made a couple of $1 million, but they were after a couple of $1 million. They want instant gratification. And then now, they couldn't go and rebuild that portfolio because they didn't have clarity on their goals and their strategy, and they didn't stick to their plan. And then, it's just ludicrous. So everybody's position is different, and everyone's free will to, make their own decisions and choices. But I think that, strategically, you need to, have a plan. You need to take the right decisions and not get caught up in fear. Like, fear is an emotion. Ego is an emotion, right? You can get too cocky. You can get too excited. You can get too fearful. And we all go through that, right? And I think that what makes a real successful person is having those emotions and having those feelings and then controlling yourself, going, okay, this isn't right. I know I could sell it and make 100 grand and go buy myself that new BMW that I wanted, but I'm going to hold on to it because it's a part of the bigger strategy, right? Having that control, having that self-control is very, very crucial. And I think a lot of people lack it. There's the mental part of it, of the intelligence, but you've also got the emotional intelligence of being able to, I think in some areas they call it diamond hands. Have you heard of that?
No, I haven't heard it.
It's like if you're in crypto or shares or whatever, it's like a thing that trends on Reddit. It's like diamond hands. So you fucking hold on, right? You don't sell, right? And that's not always the right thing with property, right? You need to make a calculated and educated decision. And sometimes they'll sell properties. I told you about a property I'm selling recently, which is a penthouse. It did some great things. And I'm like, fuck, that's not going to come back at that price again. It's okay, I'll get rid of it and I'll just use that to jump into another asset.
But it's serving a purpose.
It served a purpose.
Yeah.
It served a purpose. So I'm like, that did the right thing. I'm happy with that decision.
I'm always saying some people, but I don't mean that to sound like offensive to anyone if that's your opinion, because I don't think there's necessarily a wrong strategy. But what I've found sometimes is that people still see a lot of value in holding cash.
Yeah.
And I think there's a lot of misinformation and maybe not enough education.
Cash is trash.
Around the fact that, like, I'm pretty sure you can look up on Google. I think it's called the M1.
Yeah, M1 and M3 money supply.
Yeah, so M1 is like, you might know more about it than me, probably
course,
do, but like,
I'm
sure you do. But it's pretty much like the entire amount of money that's in circulation, if I'm not wrong, right?
Yeah, it's been printed in the last year.
Yeah, so if you can go check out like how much, like type in what
M1 money supply or M3 money supply, you can actually see in 2019, just before Corona, it went up. It was like 600 million and it went up to like fucking trillions of dollars. It literally went hockey stick. And the money that you see, like this is like, I don't even have
for like worldwide, I think it went from like 4 trillion to 20 trillion.
Yeah.
Something absolutely crazy like that. But I suppose the point is when you're holding cash and you feel really good and warm and fuzzy about selling something at a profit, what you're not thinking about potentially is that your money's not buying what it used to.
This is on the back of one of those articles that I threw down. This is how money...
Very official.
This is how money was like before. And actually, someone asked me like whether it should be on a... Like what would happen if we're on a gold standard again, right? And the amount of money that got printed over the last 200 years was actually pretty flat leading up all the way through the 1900s, and as it got to the late part of like 1970s, 1980s, it started going up. But more to nowadays, you actually see the charts of the M1 and the M3 money supply heading up like a hockey stick, and it goes straight up, which I've shown it quite often on here, Pat. But exactly, like people have a feeling of security with cash, right? And cash is trash. Like, I want cash flow. I like money, but I don't want to hold it. $1,000 that you had last year is not going to be able to buy the same shit that $1,000 this year you can buy. You could have bought more.
You know, before the live started, I went and bought some fruit from Coles.
Yeah.
My wife Jess was like, pick up some fruit for the kids.
Yeah.
And I joke about it with some clients, but I always like, as a kid, I used to love paddle pops, right? I'd go off to school and buy a paddle pop.
I always buy paddle pop when I used to
for 70 cents, rainbow paddle pop.
Yeah.
You go to the servo now, it's bloody $3.50 for a paddle pop.
I saw it the other day, $4.50 for a paddle pop.
$4.50.
$4.50.
I remember a Magnum was the premium thing, and that was $2. I was like, what?
It was like $6.50 the other day.
$2 for a Magnum.
$6.50 for a Magnum.
But a bag of fruit, it cost me $50.
$50.
I have a quarter of a watermelon, grapes, blueberries, and a punnet of strawberries. It was like $50.
I'm going to show you where to get your groceries from, right? I've got this farm that I'll send you to.
Hook me up.
Yeah, I'll hook you up to it, and you can get it there, and you get a big box for $50. Like, they give you a big box of it, right? My arms don't even fit on. It's like a big box, the size of a microwave box, full of all of what you want. It's like $50. You walk out, $50. That's it.
But like, I was astounded,
and it's good, like GMO free.
Yeah. But like last year, it wouldn't have cost you that much.
Exactly. Your money's buying your nose, but people respect money, right? And you never hear me say about money. I talk about, you know, assets. That's what I like. It's assets. I have no respect for money because
Mm.
it's just manipulated, and that's why I said the most fearful thing that everyone should be aware of is this fact that the RBA is now coming out very clearly saying that they are going to make a central bank digital currency, and it's going to be running alongside the currency that we have. And I believe that it will be given away as a universal basic income. So as people start getting poorer and poorer due to the cost of living going through this recession, the transition, this one's pretty deep, the transition will be by them giving you a universal basic income. So if you're a good boy and you do certain things, then they will give you $300 for that, $500 for that. Do you remember we were talking one day about, you know, those grants, they give you flood grants, corona grants, shit like that. It's literally they're going to give you those grants if you
Mm.
haven't performed certain tricks to fit inside that system, then they're going to cut you off from accessing those things. And that's the world that we are entering into, and it's very, very scary because you don't have control over your own personal liberty and freedom. So
Mm.
yeah,
All the price of paddle pops.
price paddles, yeah,
The first time I ever heard of inflation
yeah,
in terms of the economy
yeah,
was way back. It was in 2006. Do you remember
yeah.
when there was the banana inflation? There was
Oh,
Cyclone Larry,
really?
and that affected all the banana crops in North
Oh,
Queensland.
wow,
And there was this banana inflation. And
wow.
I remember it all over the news saying banana inflation, and the cost of bananas went up by like 400% or 4,000% or something crazy.
Surely people though now have to realize that you can't have banana inflation because of a cyclone, right? And then have a car inflation because of China, Corona inflation, Ukraine inflation,
Mm.
Donald Trump inflation, all these different things. Isn't something odd that it's just the money is losing all of its value, but people still have an intrinsic love for money? And don't get me wrong, I think it has its place very short term. You want to get it in your hand, you want to get the fuck out of your hand, and that comes back to cash flow. So
I think sometimes it's mistaken as the result.
yeah,
Like having cash in the bank, yeah, that's my end game. I want to have a
yeah,
million bucks,
that's nothing.
you know. But so what if you've got it there, and then what,
Yeah,
you know?
I did a video the other day. And I was talking about it, just random about schooling, and it was like on a podcast or something. And I was talking about no one's ever come up and said, "Hey Nathan, what did you get as a UAI at school, right? What did you study at university, right?"
Mm.
No one gives a shit about any of that. What I get asked on a day-to-day basis is, "What's your net worth? Where's your equity? What's your cash flow look like? What's your income and expenses looking like? What is your credit score?" Right? Those things there are the things that are important. So, but they rarely teach you on how to control that and how to get ahead. No one really knows what their net worth is. No one knows. Like, you know, most people will be filling out their assets and liabilities and look more like a suicide note rather than like a, you know, what I'm saying is it's something that people have a fear have a fear, but they want to have cash, but it's the opposite they should be looking at because they're programmed. There's no other word than programming it to believe something different than what it is. So
And also,
yeah,
if the cash is sitting there like a pile of cash in your bank account, and it's not being stimulated, it's
yeah.
just going to run out. Like
Well,
it wants to
exactly.
move, right?
Yeah,
Like
yeah,
cash flow is, as
yeah,
you say, is really what you want. You don't just want a pile of cash that you can edge
yeah.
down every year.
It's losing. It's
You
losing. You
know.
need it to have momentum to be effective. You need it out there creating more cash flow and yeah,
Mm.
compounding on itself. So, got some other comments coming through. So let's have a look at these. Birch, you bet you loved a a sunny boy back in the day. Yeah, sunny boys. There's something we haven't heard for ages.
They're the
Uh,
ones with the platypus or something. There you go.
no, I think they're the sunny boy. They're like the little cardboard box ones. You know,
Oh, the little slushy things.
yeah, they're like a little
Yeah, I remember
triangle
them.
thing. Yeah.
Yeah,
UBI, isn't that some sort of STD? I actually said that years ago. I was sitting there going, it sounds like a fucking STD, right? But yeah,
Rob's there too. We got to catch up with Rob.
ego is an emotion. Any
Yeah.
emotion gets you killed, whether it's too cocky or overconfident or whether it's fearful, you know, good or bad. Emotion is bad. You should always leave the emotion to the side. Yeah. Adam said, I'm a developer and agree. Hopefully, you are doing well, Adam, and everything is well at your end. If you need help, just reach out. Lydia, and everything always have a why. or a driver, like Patrick beautifully put it. If you're not hungry enough, then you won't push when you're uncomfortable. Gonna do good. Danielle's got it all down pat there. Steve said, "Hey Nathan, do you have a prediction on when the hyperinflation will occur, and when should we look to start consolidating debt?" Of course, no financial advice, just two mates talking at a pub. There's actually a really important one there, Steve. So, just an indicator of what to look out for, right? We've seen a large level of inflation where I believe the real inflation is probably more like 15-20% out there, right? They're saying that everything's only gone up 6% or whatever bullshit they're telling you in the CPI. Um, but but the reality of it is that we've now seen interest rates go up because we've got a bit of inflation. What will happen when we see the inflation turn into hyperinflation? We might have 50% a month inflation. That would have a greater effect. There'll be a point where it will play out. And it could happen and blow up within a period of 6 months or 12 months. It could just fly off the charts. But at that point, then they would have to push up the interest rates. There will be a point that you need to look at it somewhere along the track to go, okay, I should pay up my debt. And that's when the currency is going to completely die, because you don't want to take high amounts of debt into a new monetary system. You do want to pay it out. And that's nowhere near where we're at the moment. It might be in 5 years' time, it might be in 7 years' time, it might be 10 years' time, but it's when a Big Mac meal will pay out your mortgage. That's the sort of level of inflation that I'm looking at. So,
do you think that'll happen gradually, or like within a very short space of time, all of a sudden,
I think
shit
that
will just start ramping up?
it's ramping up, but it'll. There's this analogy. Let's assume that we're looking at we're on the top of a grandstand, right? We've got the grandstand inside of the Homebush Stadium in Sydney, right? And there's 100,000 people in the stadium, right? Let's say there's no one in the stadium because I'll probably drown after my analogy, right? But let's say that me and you are sitting up the top of the grandstand, and one drops into the stadium, right? So you're sitting there watching the football, whatever the fuck happens in there, and a drop lands in the ground, right? It's like nothing. Who cares? You didn't even spot it. And then half a minute later, so 30 seconds later, two drops, right? You don't notice it. And then 30 seconds later, four drops, right? And it just keeps doubling. Every 30 seconds, the double amount of what just landed in there doubles. So you go through the first 5 minutes, 10 minutes, you're seeing a drop, two drops, four drops, six drops, eight drops, 16 drops, 32 drops, 64, 128, 256, 512, 1,024, seeing all these drops occur, and you don't think much of it, right? Who cares? And then it's only about when you get to about 50 minutes into it that when you've got, a splash, right? And then you have another splash pop on, and then it doubles and doubles and doubles and compounds. Eventually, you'll see the stadium go up by a quarter, a half, and everyone will be drowned in the stadium. And that is a point where inflation will hit. No one will realize that it's happening, right?
Until it's there.
And people are starting to realize, but it's like there's a few big drops landing in there. But it's only at the point when it gets further on, people go, fuck, right? They've got a massive issue. And the alarm bells should be screaming, this system's fucked. But the people that control the system are the ones that are, putting out all this propaganda. So that's the point, which, you need to be diligent and go, this doesn't feel right. I'm going to get the fuck out of here before everyone drowns. And that's the reality with our currency that we've got at the moment. Everyone's going to be, Brendan said here, Birchie, I know I'm pushing my luck, but how about a quick bit of insight into the Hervey Bay area? The Hervey Bay is a very nice area. It's close to the Fraser Island, right? Look, with areas, I don't like the hotspot. I like the location there. Lots of questions coming through here. I don't like to, here's a question. I'm going to leave it for Pat. Do you see me hot spotting? Go, this is the best hot area. Have you ever heard me? Have you ever heard me?
No.
What
do? I'm like, fuck, this dude's mad, right?
Well, it's quite the opposite. If it's hot, we don't even go there.
Exactly. But when I say hot spotting, people are trying to speculate. Oh, this area is going to be tougher.
This specific area.
This specific area, yeah. No. I'm like, this deal's fucking mad. And you're like, why? And it's like, look at the cash flow. I pull out a cash flow sheet. I'm looking at comparable sales, seeing what else it's selling. I don't care if it's in Perth or Queensland or Sydney or wherever it is. I'm just looking at the sort of
Because
numbers.
again, if you're looking at a specific area, that's limiting the amount of property that you're looking at, limiting the amount of deals that might be available, probably taking up too much time because you're going to be spending all that time looking for the best deal.
Yeah.
And then all of a sudden a year's gone by where you could have bought, who knows, a handful of
5.
properties,
Yeah.
but you're hanging out in Harvey Bay waiting for the price to, waiting for the right price to drop.
Gee. I like Harvey Bay. I actually think that there'll
Yeah, it's
be
a
a
great
good
area.
future there. 2 years ago, there was a lot of opportunity. There was a lot of large blocks of land with large unit blocks and stuff like that, like nice sort of properties. But the market has gone up a lot, and those things, have
That
disappeared.
goes, using
Yeah,
Harvey
most
Bay as an
areas.
example for sure, but like, it goes for anything.
Exactly. That's my point.
Yeah, if you're, what's the word? I suppose dedicated to a certain area
Mm.
or fixated on an area because you think it holds value, that's good. But don't wait. Don't wait for, so much time that you miss the boat everywhere else.
Everywhere else, yeah. Someone asked here, Robbie said, hey Nathan, when going from 1 to 2 to 3 to 4 and so on properties, what cash flow yields are you looking at so your serviceability is still there for future growth on your portfolio? That is a very good and very important question. It's not always about the cash flow. And Pat, I sent you a property the other day that you missed out on, which was like 100. What was the price? 140, no, 140k, and
yeah.
rents for $750 a week, right? And someone else took it, and it was like looking at that, like, would you want a portfolio of those properties? Most people on here would be like, yeah, I want 140 grand and get $750 a week for it. Everyone would be jumping at it. But would you want a portfolio of 20 of them?
Probably not.
Probably not, because you only want it to serve a certain purpose, and
That's
that
right.
purpose might sound great, but it has inherent risk attached to it. But if you can't get a loan, you would want that property boost you up to get you into another one at the bank. And you need to work out, do you need equity, do you need cash flow, and at what part on your journey you're at. And Pat said he's just pulled out a chunk of equity, which is mad. He just settled 2, pulled out equity straight away from one of them, like 120 grand. How long ago did you buy that property, and how long did you pull the
I've
equity?
only just got my first rental statement from it, just last
So
week.
4 weeks.
I wanted to be a bit of a guinea pig,
Yeah.
and be the quickest refinance that Zinger has done.
You would have done it
I
on the
literally
day.
said on the day of settlement, I said
Yeah.
to Seward or one of the guys, "Can I refinance?"
Yeah.
But we had to wait till a few things pop through.
Yeah.
But nonetheless, let's say within a month.
Month.
Yeah.
So you pull out that equity, and then that one there gave you 120 grand equity. But then if you may want some cash flow, right? So you can unlock further equity in other properties. So how do you get more equity? Well, you need to be able to service to the bank, right? So if you go and buy a property that's for 140 grand, rents for 750, that's going to unlock the servicing for you. And ultimately, you need to work at each step. What do you need? And for you, like we were talking before this live, what the next property looks like, what the next one looks like, and to get you to the 5 by Christmas. So for this year, so the 5 new ones.
I think something else important for Robbie there is he's mentioned cash flow yields.
Yeah.
So that's a really like important point. Some people just look at like the cash flow. They think all the cash from the property is going to help me in the bank. That's not the case. Certainly speak to a broker to get specifics on that. But the yields is what you should be looking for. I think the magic number is about 7 or 8 or something like that.
Yeah, 7-8% is good. Yeah. But as is your equity, as is your growth, and
and each bank is different too. Each bank has different lending criteria, and
here you go. We've got Jackie that I went to school with saying school canteen 40 cents for those double chocolate paddle pops with the 2 sticks. They've actually come back with them. Have you seen them? They've got them at Woolworths or something, twin poles or some shit. So you can split them in half. Exactly.
There you go.
Rihanna said, so you're saying it's still worth investing in property in growth areas and renting, but what about if there is no rentals or they are twice as much as a mortgage? Let me read that again. So you're saying it's still worth investing in property in growth areas and renting, but what about if there is no rentals or they are twice as much um, as a
So maybe
mortgage
she like
for renting a property? Yeah.
she's investing and renting where she wants to live.
Yeah, I think it's important to work out, like most of the time when people are living in a house they want to live in, it's not necessarily, the best investment. So if the property is going to be a positive cash flow property that you choose to live in, well then that's pretty cool, right? You're saving the rent that you would be paying. However, if you're buying a property that would be negative cash flow, well then you can better use your cash elsewhere by buying something different potentially. So
Mm.
you just need to work out what's the right thing to do. I have probably bought more properties this year, dollar value, than I have any other year over the time. I've just went and got myself financing. First time I've got financing in the last sort of 5 or 6 years, which is, yeah,
Congratulations.
thank you. So imagine me without loans, right, which is what I've been doing for the last 5 years. Imagine me with loans,
Yeah.
right? Imagine the cool things that we can do. So I'm seeing the opportunities that's out there, and when I share with everybody my coolest property that I bought this year, you'll just sit there and go, "Fuck!" Right? I'll tell you about it later, but it's about to go through this week, but just getting all the loans and all that sort of stuff sorted on it, but I'm very bullish on the opportunities that are out there because the cost of building, you've got no builders in the market anymore. You've got is unprofitable. So the pent up demand. Here's something to think about, right? We saw a massive boom off the back of the GFC. What happened in the GFC? There was a liquidity squeeze. There was no money. Builders went broke. Developers went broke. Bad things happened out there. What happened during that time is that no one was building, but they needed to put all these stimulus packages in. So if we have no building this year, no building next year, there's a very low level of building, that means that we are now in deficit of new dwellings, which push up
Mm.
the values of them. So I look at the cost of acquiring. That's why I'm always, is it cheaper to buy this thing than to build it? I was chatting to one of our good investors the other day who decided to buy a property. I don't buy houses to build granny flats because I just don't see the value. And we're talking, and I asked him, he goes, I bought a house, I'm going to put a granny flat on. I'm like, cool. How much are you paying for the granny flat? He goes, 200 grand. I'm like, why would you spend 200 grand on a granny flat? You can just go and buy an individual standalone property for 150 that rents for 300 bucks a week, right? We do them
Mm.
every day of the week. But his mindset was, I want to build a granny flat on the thing, right? But when I look at the value and the intrinsic value, with someone paying 200 grand to build a granny flat, they are making the value of a freestanding house down the road for 200 grand worth so much more, right? Because they're
Mm.
setting a base there to push up the value of all the other properties in the location. So, it's important to, sort of address all these things and look at, is it a good time to buy? And I'm very excited. So, just on my thoughts.
Mm.
Um,
On Rhiannon's question though, I
yeah,
think there's a bit more to unpack
yeah,
there.
yeah,
Like we have heaps of people that are doing exactly what you're suggesting there, and I think if I'm reading it right, you're saying invest elsewhere and rent where you want to live, but
yeah,
where you want to live, the rents are too high.
yeah,
A small example of that is like we're buying properties that are bringing passive income. So if you buy three properties, it might bring you $200
it'll
in
pay for
total or
you.
something. So that will it might chip might not pay entirely for the rent, but it'll certainly chip away um, at the rents where you know is more desirable for you to live. So
Mm.
we can have a further chat about that.
Yeah, if you have any questions, reach out to Pat. Um, uh, Mally said, "Do you anticipate that the recession will drop back and market will boom again before hyperinflation?" The hyperinflation will be the boom. So if we're looking at, sort of growth and we're going through a deflationary period, but it's not actually being deflationary because if it really turns to deflationary, like the whole Western world as we know it really dries up and dies, right? Like you said about your fruit. I was at a cafe, I was at my osteo, and then I feel like an old man. I was at my osteo, right? And I went to the cafe and it's like, I'll get a juice, right? No juice. It's like, why don't you have the juice? They go, it's unprofitable to sell you the juice 10 bucks because it doesn't fucking make any money. It's negative, right? They can't get the fruit. It's too expensive, right? So you look at, I think it's that Rashay's bloke. He said that if he was to pass on the cost of fruit and vegetables to his clients, they'll never come back to him, right? So he has to lose it as a part of the business. So they're trying to stop the inflation. They can't stop it, so they've got to let it run and do its thing. So the only way out of this tightening, this is the best it's going to get. With us going into a recession, here's something, right? This could be the biggest takeaway you've heard all week, right? For us to go into a recession, that's the best your life's ever going to get financially. Just think about that, right? Because it is never going to get cheaper than what it is at that period of time. That's the best it's going to get. Because to get out of the recession, things are going to fucking blow up massively and we're going to see massive levels of inflation. I actually don't think we're going to go straight into hyperinflation. I think that it's a treatment of the problem that we have, which is going to be the catalyst for it. So, and I just noticed the timing. Like we've gone on for ages, Pat. Like you probably got to go.
Everyone pays out on me in the IR team,
Really?
saying that all my chats are super long.
There we go.
Pat chat. I look at the phone after a phone and go, oh shit, 58 minutes. The discovery session's meant to be 20.
Well, with it, I'm just going to answer Steve's last question here, which is, can you explain more about a CBDC? Why is it such a big concern when the RBA already controls the money? What more control could they have when you don't have already now? So basically, the risk that I see with this central bank digital currency is that you could go to the bank and take out $1 million worth of cash over the next 2 months, 3 months, pull out 10 grand here, 5 grand there, 2 grand there, whatever. But if you are in a central bank digital currency, which is a completely digital system, they have the right to freeze your account, block your account. I've had all these things happen, right? I've had heaps of random shit happen in my life. Like my driver's license suspended. They'll say, no, we don't like what you posted on social media. We're going to cancel it. So they have the ability to control and turn you off. If they want to take you out of the grid, they just turn you off. Like on the Matrix, pull out the chip and go, you got no account. You can't cooperate in our system. See you later. So it gives ultimate power to the overarching rulers, and that could be a massive concern. If you don't conform, obey, it is a level of control like communism. If you go and look at the social credit system in China, the social credit system in China is not a fully central bank digital currency yet, right? It is fucking communism to the max, and we're now installing 2.0 of that, and it's going global for everyone to contribute and be a part of. So it's not a choice that we have, not an option that we have. It's just a part of what is happening. So on that note, guys, I just want to thank everyone for tuning in and hanging with us for an hour and 40 minutes. Pat, thanks a lot for coming on tonight, and thanks a lot for what you do for all your investors. Everybody loves you. You have good relationships with all of your investors. That's why people like the Pat chats. So it's like, if anyone's got 2 hours up their sleeve and would like to have a chat with Patrick, now, if you have a position that you don't know, if you don't know what to do as your next step, reach out to the team, 1300 367 925. Send an email over. Pat will get the emails at admin@binvested.com.au. Just reach out, flick us a message, and have a chat with Patrick. I was going to say have a chat with Pat, but I've got to be formal here now because it just catches.
We're very formal around.
We're very formal around here, and yeah, if you whether you've got a position, whether you're looking at starting a position, whether you're looking at if you're stuck and need a conversation with someone, reach out to the office, 1300 367 925. We're always here. Well, not always, but most of the time we're not too far away. Jackie said thank you. I look forward to my Pat chat. There you go. If you guys need anything, just reach out, and I'll be back here next week, Tuesday, 7 o'clock. So on that note, I was trying to just jump to the screen, and then I saw Mark said here the Scandemic QR pass over the last 2 years was the training ground for the CBDCs, and I think that is probably a very good way to sum it up. Right, we're being conditioned to participate in this new system, whether we like it or not. So, on that note, guys, it might sound depressing on that front. Very exciting times. I've never been so excited. Pat, you've probably never seen me more excited than what I was to start. I was like, fuck yeah, this is cool, right? It's a good time to be alive. Lots of opportunities. You don't want to be sitting here 10 years later in your life, 5 years later in your life, being miserable, going, oh, I wish I could have bought houses for 150K.
Mhm.
Probably whiskey or some shit in the glass at that point. You were like, oh, I hate life. Oh, I wish I got a property. You'll sound like one of the people in one of those news articles there writing bullshit about how bad the world is. So make sure you take action. Make sure you make this time count. If you need help, we're here to help. Catch up soon. Have a good one. Bye for now.
No.
Well,